From what I can tell, you appear to have reconsidered a couple of the things that you said in the heat of the GameStop moment. Where do you stand on hedge funds as a group of actors and the role they play in modern finance? And also the other thing that came up in the context of the situation, short selling.
I think hedge funds are a really important part of the financial infrastructure, and I think that they should exist, and I hope that the ones that are good can thrive. But I also believe that disclosure needs to get improved. I think in every other part of society, as the internet has become more sophisticated, as software has become more sophisticated, things have erred towards real-time disclosure of everything in every market. It's just not true in finance, where people are able to sort of use the rules and bend them to obfuscate the truth. So, for example, there was a rule that the SEC was considering where you wouldn't have to publish your longs anymore on the same frequency. To me, that's nuts. I think that actually, we live in a world where your longs and your shorts should be published in real time. Because again, what separates you should be your analysis and your interpretation of the facts, not obfuscation. Another thing is that I think that you should be, forced to disclose the margin that you're running and how much leverage you have. And, I think that hedge funds and banks are no different. They're a critical part of the financial infrastructure. They should be treated in the same way. And instead, I think after 2007 and 8, a lot of the risk effectively, quote unquote, went off balance sheet and away from the banks and towards these other really important actors, but who just don't have that much oversight. I still think hedge funds will do really well. I still think that there are some folks who are incredibly talented who will make just a ton of money for themselves and for their investors. But I think disclosure needs to go up. In terms of short selling, I buy the fact that it's an important part of the market. I'm not a huge fan of it. I do think that certain folks really use it to run a neutral strategy. And, I think that that's great. But I also think that, now in the world of social media, and we've seen this recently, disinformation can be used to not just cause political damage, but I think disinformation can also cause economic damage. And so I think that the SEC is going to have to deal with that issue and figure that out. How do we manage information or interpretation or sensationalizing of things that all of a sudden can whipsaw the markets up and down? And these actors, how are they regulated? Are they allowed to just say whatever they want and the implications are what they are? Or is there a higher standard now that there's so much distribution for so many more people?
That is a calm, sober, and thoughtful analysis. It wasn't a few weeks ago. What changed?
Well, look, as with everything, I really do take pride in the fact that I have strong opinions, but they're weakly held. I think it's important to have a point of view. And, I come to very quick conclusions. But also sometimes I'm emotional, and those conclusions are more judgments. And then I take a step back, and I'm fortunate enough to have a lot of people around me that question what I said and push back, and then I re-underwrite. And it's not dissimilar to an investment. I try to come to a very quick point of view, but then I get data and I constantly re-underwrite. And, then the heat of the moment passes, deal heat or, emotional judgment. And then what's left is a sober assessment of the truth and facts. And, that's sort of where I am now on this. And frankly, most of the things that I do.